All right, let's get right into it. We're going to be talking about a really wild story. A real estate company that, to be honest, was on the ropes. And then, out of what feels like nowhere, its stock goes on this absolutely insane tear. So today, we're unpacking the whole mystery behind Opendoor.
And when I say an insane tear, I really mean it. You have to picture this. Back in July of 2023, Opendoor's stock price it exploded. We're talking a surge of over 400% in a super short period of time. A move like that, it definitely left a lot of people just scratching their heads. So yeah, that's really the big question we're trying to answer here. I mean, one minute, a company is getting official warnings from NASDAQ saying its stock price is so low it might get kicked off the exchange. And then the next, it's the talk of Wall Street. So what on earth happened? It's a true financial mystery. To really get what happened here, you gotta look at the one thing that kicked this whole thing off. The spark that lit the fuse. And believe it or not, it all started with a single post on social media.
And this was it. This was the quote that was heard round the retail investing world. You have Eric Jackson, a pretty influential investor, just throwing out this incredibly bold prediction. He's suggesting the stock could multiply its value 100 times. Yeah, that's the kind of statement that's going to get people's attention.
So you're probably asking, why did this one guy's opinion matter so much? Well, Eric Jackson isn't just some random person. He kind of gained legendary status with a lot of traders because he made this incredibly accurate call on the used car company Carvana. He predicted its huge recovery when pretty much everyone else had written it off. So when he comes out and sets a wild $82 price target for Opendoor, people listen. And just like that, a firestorm of buying erupted on platforms like Reddit and X.
And boom, just like that, Opendoor officially became a meme stock. And what that really means is you have a situation where the stock's price isn't being driven by things like profit reports or financial health, but almost entirely by online hype and what people are feeling and saying on social media.
Okay, so with all this market drama, it's pretty easy to forget there's an actual company at the heart of all this. So let's pull back the curtain for a second and look at what Opendoor actually does.
Probably the simplest way to think about Opendoor is, well, as the Amazon for houses. It's a huge, ambitious idea that's really trying to change one of the biggest, most complicated things any of us ever do, buying or selling a home.
The company is what's known as an iBuyer, which is just short for instant buyer. The whole business model is built on using technology to take all the friction, the time, and the uncertainty out of selling your house. You know, no realtors, no showings, no waiting around for a buyer's mortgage to get approved, just a quick, all-cash offer.
And here's basically how it works, in a nutshell. You go online, you plug in your home's details. Opendoor's AI then crunches a ton of data and shoots you back a cash offer, almost instantly. If you take it, they buy your house, do a few minor repairs, and then they turn around and put it back on the market, hoping to sell it for a small profit. For the homeowner, the big appeal is all about speed and convenience.
Okay, so you've got this game-changing business model on one hand and a stock that's gone viral on the other. But this is where the story gets really complicated, because there is a massive disconnect between the exciting story people are telling about Opendoor and the cold, hard numbers you see on its financial statements.
And here you can really see those two completely opposite narratives, side by side. The bull case, that's the optimistic story. It's super compelling, right? They're the last major iBuyer left after giants like Zillow and Redfin gave up. And they're focused on the fastest growing real estate markets. But then you look at the bear case, backed up by some really sobering numbers, and it tells a totally different story. We're talking a staggering $1.4 billion loss in 2022, a business model that just gets crushed by high interest rates, and a long history of burning through cash.
So you really have to look past the hype and dive into the numbers. Let's break down some of the specific financial red flags that have analysts so concerned.
First up, their cash flow from just running the business is a negative $280 million. What that means is, in its core day-to-day operations, way more cash is flowing out of the company than is coming in. It's like trying to fill a bucket that has a giant leak in the bottom.
Next up, their equity ratio is just under 20%. In simple terms, this means that the company's assets, all those houses they own, are mostly financed by debt. That is a really high-risk way to operate in any market, let alone in the volatile world of real estate.
And the story doesn't really get any better when you look at other key metrics. The company's operating margin, its return on equity, its return on assets, they're all deep in the red. Basically, no matter how you slice it, Opendoor is not generating a profit from its operations, from the capital investors gave it, or from the very houses it owns. So where does all of this leave us? We have this incredible story of disruption and innovation on one side, and this really concerning financial picture on the other.
Is this whole thing just hype, or is there a real, genuine opportunity here?
Let's recap the bull case for a second. Opendoor's strengths are pretty clear. First, you've got the core product, incredible speed and convenience for anyone selling their home. Then you add massive scale, they're in over 100 markets, and a powerful vision to become this all-in-one shop for real estate.
But the weaknesses are just as critical, and they are major. They have huge inventory risk. If the housing market slows down, they are stuck holding a ton of houses. Their AI is smart, but it can't price something like the vibe of a neighborhood. And maybe most important of all, their entire business is pretty much at the mercy of interest rates.
You know, when you put it all together, the conclusion is pretty clear. Opendoor is not a simple good or bad story. It is the absolute textbook definition of a high-risk, high-reward investment. And that really leaves us with the final million-dollar question. Is this the story of a true revolutionary disruptor that's just trying to get through a really tough economic storm, or is it simply a high-risk gamble whose recent success was fueled entirely by meme stock hype? The answer is, well, it's far from clear. And that's what makes Opendoor one of the most fascinating and polarizing stories in the market today.